Hello, this is Pat Walker at MissionWinners.com, and I'm making a video for Akash. Akash, you ask an excellent question. I'll share this with everybody. It has to do with stop losses. Here's what he says, and again, great question. We bought keys based on the price action in your tweet. Since then, keys has moved up, and yes, it has, and for that I'm thankful. I'm guessing it is wise to move up the stop loss every day as the stock trends up. Question one. He's got three really good questions. What should be the right stop loss, and how much to move up or down on a daily basis? When do you recommend to exit, and the exit strategy? Great question. So we know we're in a kind of a crazy market, in fact, pretty ugly market. So what have we done? We know that we've sold some into strength, but let's assume we did. Well, no, we did. So let's go with that fact first. So we sold some into strength. I'm looking at the daily chart. This is as of Monday's close, January 14th. You can see it's grinding up. You have higher lows. Higher low, higher low, higher low. This low was just a little bit lower. We factored the poor market action into our decision and sold a little bit more. Does it still look fine? It looks great. We have a profit. We're in good shape. So what are we going to do with it? Are we going to ignore it and just let it go? Oh, no, definitely not. What we will do from this point forward, we will do a couple of things. We will watch the market action, the big market action. How's it doing? The second thing we will do is we will monitor this. If this takes out today's lows, if keys takes out today's lows, we may sell a little bit more. But what we will definitely do is this. We do not want this breaching way below the 8-period exponential moving average right here. The yellow line is the 8-period EMA. If it starts to lose the 8, we will, and the market's bad, we will exit out the rest of our shares. We're not going to buy this, have a decent profit, and have this come back down all the way below our price. I have a philosophy. I will never let a decent profit turn into a loss. That's why I am so stringent on buying. Buying across this line right here starts to move up. We don't want to have a problem up here. If we do, we will sell it. If it loses, this is Monday's close. This is Monday's bar. By the way, you can say, how do I know that? Oh, just to help everybody frame it up. You see over here, that number corresponds to the date. So when I put it on this bar, look over on the left-hand side, that's Monday's close, January 14th. If it takes out these lows, we may sell a little bit more. If it loses the 8-day, we will sell the rest. We're not going to round trip this. So I hope that helps you. One of the best things we can do is monitor the price and volume action every day and see how it acts. And as long as it's grinding up, we let it work. Starts to lose the previous day's lows, may take a little bit off. Starts to lose the 8-day, may take more off. If the 8-day, losing the 8-day, is close to our purchase price, we'll sell the rest of it. That is the best way to do it. And you can see where I say 25%. I love to sell off in 20% increments or 25% increments and sometimes 33% increments. I like doing it that way. It works out nice. You know, you buy 100 shares, you sell 25 off. You can say, well, that's no big deal. Hey, you know what? On some of these stocks, even 10 shares on Amazon can make you $1,000 in a couple of days. So that's why we run it the way we do. And we'll always make sure of this. We're never going to have a major catastrophe, barring a huge gap down. We don't argue with price. We will sell the sucker. We will, and just get out. So, and we're also in the midst of earnings season starting, so we'll be careful. Akash, it's a great question. It's very good, and I like, how you took it on a step-by-step, 3 parts. So I thank you very much for the question, and I hope that helps, sir. And again, I thank you.